shorting the market in Nvidia. Terrible idea. The euphoria was insane, and I had no process for getting in and out of that.
Hi Team Value, JJ here, welcome back. Well, today I'm going to react to a recent video by Paul Gabrail from Everything Money. He's revealed some of the investing mistakes that he's made, and credit to him for doing that. And one of them was shorting Nvidia recently during this exuberant period. So we'll look at that, and we'll also look at what Warren Buffett and Charlie Munger have said about shorting stocks. So let's get into it.
Guys, these are the biggest investing mistakes I've made in my life. The reason I'm sharing them is, one, I believe the Charlie Munger thing of put your face in your mistakes and rub it in there. And two,
absolutely,
you're going to learn from these things as well. Now, it doesn't mean that just because I did something wrong that you can't do it better. Absolutely not. There's tons of ways to make money out there. And the ways I've lost money can be a way that you make money. So first and foremost, shorting. I used to believe that markets are overvalued. They'll eventually turn, therefore short. They're not going to last that long. 100% wrong. I was absolutely wrong on that. Guys, do I believe in shorting? Absolutely. But the thing I didn't do was I didn't have a process for that shorting. I just thought overvalued meant short, it'll eventually fall. Guys?
It's interesting that he still believes in shorting. Obviously, he's lost money on shorting quite a bit. I guess we'll hear the story, but he still believes in it.
First company I ever shorted was Facebook at $31 or $32 a share and went down to 18. I exited at 21, felt like a king. Then Amazon, poop. Amazon, I was wrong on that one because I didn't see the growth and I didn't understand the numbers in there. That growth was insane. I think it was so bad, so good for Amazon, I got, killed on it. When I say killed, I'm being dramatic.
A lot of value investors do get killed on Amazon because they didn't understand, that what Bezos was doing there, reinvesting, and it was the profit was kind of hidden in there for a long time.
Two, shorting the market in Nvidia. Terrible idea. The euphoria was insane, and I had no process for getting in and out of that. I'm now out of both of those, and I'm happy about that. And I could have lost a lot more money. I remember thinking to myself, the second I exit this, the market's just going to plummet. It did not. I wish it had. It would have probably made me feel like, oh, crap. But at the same point, it just proves that markets can be irrational longer than I can stay solvent.
Yeah, that's a classic. That is investing 101. And shorting a stock that's exuberant, it can go on for so much longer. Even if we look at recent history, if we look at Tesla, it got to over 400, but it went on for a long time. A lot of people said it was in a bubble for a long time. It's this dangerous game to play, shorting stocks that are in bubbles, and he's obviously learned his lesson here, I think.
Now, obviously, I'm fully solvent. I did lose money, and I just put in our community today a quote that's very relevant to this video. Your first mistake is going to be expensive. Your second mistake, if you continue to do it, is going to be financially catastrophic. That's why I ended, and that's why I've also made the commitment of I'm not going to short just because of overvaluation. That's not the reason to short. If you want to short, learn some sort of trading method of shorting.
Okay, so he's looking for another way to short, a different approach. We're going to look at what Warren Buffett says about shorting here. It seems like to me that he hasn't completely learned his lesson, but it depends how you think about shorting and who should short.
Because there are great ways of reading charts, reading momentum, reading MFIs and things like that to short a company based on momentum. I'm all in favor of that.
So I think shorting based on momentum is the way to go now, not on fundamentals. So obviously he's going to try that.
But my idea of shorting just on valuation was terrible. I shorted in the market to start because, and actually the funny thing is I got very lucky when I got out of my first market short at a very small loss, like literally 1% loss because of COVID crash. Completely lucky on that one. So I didn't learn my lesson.
It sort of reminds me of gamblers who get lucky, and stay in there thinking they're on a winning streak, not thinking about the probabilities. If they've won once, they'll win again. It's sort of on the side of gambling and speculating, I think.
I went back in on it. And that's when I lost my big money. And that's where I sit there and say, okay, didn't come close to burying me. That's awesome. I lost 10 or 12% of my net worth, which is a chunk.
Whoa, 10 or 12% of the net worth. That is a lot. Notice he said net worth, not investing money. So net worth is different than money that you have set aside for investing that you don't touch. Net worth covers everything. If that's what he actually is saying there, that's a big chunk to lose on one short.
But at the same point, I also made a lot of money off of selling covered calls, having higher interest charges. So it weighs itself out, the real estate. That's why I like what I do. That's the big thing I learned from it. That's why I like diversity in my investments, because not one single investment is going to make me massively rich. And that's exactly why shorting is not a good idea for me based on valuation.
One investment can make you rich. If a company goes 100x, if you invest in small caps, working it out that this could be 100x one day, a lot of mistakes can be made, but it can be that one company or two companies that go 100x over time. If you're willing to stay in and compound for a long time, they can absolutely make you rich. One investment can absolutely make you rich. Now, if you're getting value out of this shorting episode so far, I'd really appreciate it if you remember to hit that like button to help the algorithm to spread it to more people. It really does help.
Now, it's funny. Tim just stopped me and said, Paul, there are people who make mistakes that cost 30 or 40% of net worth. I believe in this. That's why my point was to sit there and say, listen, I didn't risk anything that was going to change my life. I risked enough where if it didn't work out, which it didn't, it taught me a great lesson.
It reminds me of what Mohnish Pabrai says in the book that he wrote, The Dundo Investor. He talks about value investing where it's heads I win, tails I don't lose much. So losing 40 or 50% of your net worth in one investment is gambling. That's definitely speculating. If you could lose that much based on one investment, that is a lot.
You know, back when I was first starting my business, my brother I made him a partner of mine because I got started from family. So I wanted to share that with my brother. And there was a time I remember thinking to myself, I was reading all these books of these successful people, and it was all brag city, brag. And I was like, man, these people don't make mistakes. And then you do more research on them and you're like, no, they do make mistakes. They do have things that don't work out for them. So I thought to myself, that's what I'm going to do. I'm going to tell my brother all the mistakes I make. So I'd tell him like, oh, I screwed this up. And finally one day he looked at me and goes, Paul, are we broke? And I'm like, no, our net worth goes up every single year. What are you talking about? He said, well, you're always telling me the mistakes you made. Now, I don't say that to be a humble brag. I say it to say, okay, I've got to balance good with bad.
It's true. Everybody makes mistakes. Even Warren Buffett's made mistakes. You can go through Warren Buffett's history, which is there for everybody to see. He's made plenty of mistakes. Peter Lynch said this too, that everybody's going to make mistakes as long as you actually come out on top, that you have to accept the mistakes here. But shorting is kind of on another level, and we'll see what Warren Buffett has to say about that.
I have people messaging me on Twitter, Instagram all the time saying, Paul, because of you, I got out of this, and that's awesome. I bought this, and it's up. I'm like, hang on a second. I always respond back the same way. I appreciate it, but give me credit 5 or 10 years from now when this process has worked out. That's the mistake I made in shorting. I didn't have a process, and I will always remember that, and I'm very glad it happened to me.
Really? Is that the mistake? I mean, my reaction to this is that he lost a big on shorting. He's done a few shorts and he thinks that he needs a better process and shorting will work out. And it'll be interesting to see if he does any more shorting and makes that public and see how he goes. Now, I'd love to know what your thoughts are on shorting. Have you ever shorted a stock before? Do you do it on a regular basis? Has it worked out well for you? Let me know what your experiences have been. Okay, let's see what Warren Buffett and Charlie Munger have to say about shorting. Their great wisdom. They're some of the best investors of all time, the GOATs. Let's see what they have to say.
Short selling it's an interesting item to study because it's ruined a lot of people. It is the sort of thing that you can go broke doing. It's tempting. You see way more stocks that are dramatically overvalued in your career than you will see stocks that are dramatically undervalued. I mean, it's the nature of securities markets to occasionally promote various things to the sky so that securities will frequently sell for 5 or 10 times what they're worth, and they will very, very seldom sell for 20% or 10% of what they're worth. So therefore, you see these much greater discrepancies between price and value and on the overvaluation. So you might think it's easier to make money on short selling. And all I can say is it hasn't been for me. I don't think it's been for Charlie. It is a very, very tough business because of the fact that you face unlimited losses and because of the fact that people that have overvalued stocks, very overvalued stocks, are frequently on some scale between promoter and crook. And that's why they get there.
That's a really good point. And you see stocks, many stocks, especially during exuberant times, bull markets, that are overvalued. As he said, far more stocks that are overvalued. And that's the temptation with shorting, when it's hard to look for things that are undervalued, good quality companies that are undervalued, or even if they're not good quality companies, if you're a value investor in the Ben Graham sense, where you're looking for things that go back up to fair value. But most things are overvalued more often, as he said. So that's the temptation.
About selling things short. I would say that it's a very, very tough way to make a living. It's not only often painful financially, it's very painful emotionally, because a stock that you sell short, a stock that you buy at 20 can go down 20 points, and a stock that you sell short at 20 can go up an infinite amount. And you don't think about that until you've gone short and it goes up about 10 or 15 points, and then you don't sleep very well. So it's a very tough way to make a living. Over the years, I probably had 100 ideas of things that should be shorted, and I would say that almost every one of them have turned out to be correct. And I'll bet if I'd tried to do it and make money out of it, I probably would have lost money. I would have had no fun, and the opportunity cost, as Charlie said, would have been enormous, because if somebody's running something that's semi-fraudulent, they're probably pretty good at it, and they're working full time at it, and they've succeeded for a while, and they may keep succeeding. And if they succeed and you go in at X and it goes to 5X, all you're hoping after a while is that it goes back to X again or something of the sort. It's a very tough psychological game to play. Few people may be well suited for it. I would never put any money with a short fund, but not because I would think it would be ethically wrong. I just think that they're unlikely to make money.
That's another great point there about the timing. He said that he had 100 ideas over time, over the decades, that he was sure and very tempted to go short on them. But the timing is everything. Like, as Paul said, the market can stay irrational for much longer than you can stay solvent. You can still be right, just be a bit wrong in the timing and lose a lot of money. That's what Buffett's saying here. And I think Paul found that out shorting Nvidia. He thought it would go down. He was so sure, but it didn't, and it still hasn't.
Charlie, do you have any thoughts on short selling or naked short selling?
Well, I think you're absolutely right there, in the sense that that would be one of the most irritating experiences in the world, to figure out something is crooked and foolish and so forth, and then short it at X and have it go to 3X. Now you're watching all these happy crooks splashing around in your money while you're meeting margin calls. Why would you want to go in hailing distance of an experience like that?
That's a good point with Charlie again, and that why would you want to go through that emotional difficulty? And we did see Paul going through that. If you're following Everything Money on there, he did talk about this before, and I think this family money he's dealing with, it's none of my business, but he has talked about that before, that it's family, like probably a family office or trust or something that he's dealing with there. So to put people through that and actually not to win on it takes an emotional toll. Now, if you've been a subscriber to The Art of Value for a while, or you're new here and you're liking it, you might like to try The Art of Value Patreon over there. Just for the price of a cup of coffee, I post things that I don't post anywhere else. I'll put a link in the description to that if you want to go and check that out. Now, if you're watching this episode on YouTube, I'm going to put a link here to a video that YouTube thinks that you in particular should watch next. So go and see that now if you want to. I'll put related links in the description for those watching elsewhere as well. And thanks to everybody for watching or listening to this one, and I'll see you in the next one.